And
Mm.
banks themselves will issue on the same technology as stablecoins. They'll issue a coin that'll be just as interoperable as a stablecoin, but it'll have a couple of extra benefits. One is it'll be able to pay interest, not yield.
Mm.
It'll be FDIC insured. It will have Reg E consumer protections, and all those wallets will have identity.
This episode is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold makes it easy to buy, sell, trade cryptocurrencies like Bitcoin and altcoins. In fact, they have 300 plus cryptocurrencies on their platform, and they carry precious metals such as gold and silver, and you can swap between these assets. So it's really unique. Uphold is safe and reliable. I've never had any issues with them, and they are 100% reserved. You can review their transparency report. They don't commingle or lend out your funds. Now, Uphold recently launched a great product called Uphold Rewards, and it's packed with many benefits. You can earn up to 5.25% on stablecoins, get 24-hour early access to new token listings, and unlock exclusive crypto insights. And they support a variety of stablecoins, such as PYUSD, that's PayPal stablecoin, Circle's USDC, and USBC. They will be supporting Ripple's upcoming launch of RLUSD. So this is a really great rewards program. And if you'd like to learn more, please visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Greg Kidd, who is the co-founder of Hard Yaka and the CEO of USBC. Greg, great to see you. Great to have you back on.
Hey, thanks for having me.
Greg, you've been ahead of the curve in many ways in the crypto industry, investing in different crypto companies and projects going back years. And we've spoken, I think, a few times over the years. So I'm curious, what's the latest with Hard Yaka and any new investments, any new developments on your end?
So the big thing for Hard Yaka now is we're all in on USBC, which is a deposit token, runs on the same rails as stablecoins, but it'll be issued directly by banks, and including our bank, which is Vast Bank, which will be the initial bank to issue a deposit token running on either permissioned Ethereum or on Solana. And that will be new to the market. Right now, it is still a stable coin, but shortly we will bring it over and bring it within the banking ecosystem. We can kind of talk about the pros and cons there, but that's the big focus of Hard Yaka going forward, especially with the stablecoin legislation coming down the pike in this country in the next 6 months.
Yeah, let's talk a bit about USBC because I'm a user of Uphold, a platform you've been invested in and a platform I've bought and sold crypto on. And they have a rewards program where they offer 5.25% on USBC if you were to participate in that program. So you mentioned it's a stable in a stablecoin format now, but you said it will be or evolve or be transformed into a deposit token.
Right. So currently for stablecoins, they're issued by fintechs like Tether's a fintech, Circle is issuing USDC along with Coinbase, and USBC is currently issued out of the Bahamas under the DEAR Act. It's a regulated entity out there. All of those have their funds invested in banks and other marketable securities. But the difference will be going forward with deposit tokens is the middleman will be cut out. And
Mm.
banks themselves will issue on the same technology as stablecoins. They'll issue a coin that'll be just as interoperable as a stablecoin, but it'll have a couple of extra benefits. One is it'll be able to pay interest, not yield.
Mm.
It'll be FDIC insured. It will have Reg E consumer protections, and all those wallets will have identity. For stablecoins, they might have identity, they might not. And maybe that's okay for some folks, but for folks who want to know that the entire ecosystem is green, it always has identity. Deposit tokens will have that feature in a way that stablecoins can't match.
So, do you see both of these products coexisting as the digital economy unfolds, stablecoins and deposit tokens? And do you see deposit tokens being used more on the commercial side while stablecoins on the retail side?
Yeah, they will coexist. There are a lot of situations where the fact that the stablecoin can be held in a non-custodial wallet without identity is not problematic. It's actually desirable. There's a lot of DeFi. Stablecoins are really popular in TradeFi. So like the most liquid pairs are, for instance, Tether Bitcoin or Tether Solana. You know, so there are going to be uses for that. But when it comes to actual things like day-to-day commerce, we're betting that kind of the protections you have, like when you use your bank money and something goes wrong and you can get it back, that'll make a deposit token still using all the benefits of stablecoin technology for
Mm.
being able to be moved 24/7 really, really cheaply and in a way that's programmable, good for developers. So we think that both of those will coexist. We think there'll be liquidity providers. We'll be one of those liquidity providers. We'll make sure there's one-to-one parity between the stable coins and the deposit tokens.
So for the folks who are listening and they're like, wait, deposit token, I've not heard about this. So let's say this goes live, right, for USB-C.
Yep.
Would users be able to take the token and be able to use it the same way they use stable coins in addition to?
Yeah. Just think like a stable coin is a dollar that's on chain. It has an address, and you can just send it from one address to another, just like crypto, but it is a US dollar. This will be the same. They'll have one additional feature. It'll also have a bank account number. So
Oh,
there's no way, for instance, for you to get your paycheck deposited directly into your USDC address because it goes through a different system. It goes through the banking system. And so this will basically be a bridge between the banking system, wire transfers, ACH, FedNow, and the crypto rails, which is blockchain, right? And so there's no reason. Remember the days when phones, you had a CDMA phone or something else, and they said, well, why don't we put both chips in the phone? Or
mm.
you used to buy a laptop and it was either 110 or 220, and if you plugged it into the wrong one, it blew up. And then they just started making things dual voltage. Well, that's what a deposit token is. It'll have both a crypto address, but it'll also have a banking address. And so you can use it in either world.
Wow. Um, that's interesting. That's definitely going to be a disruption of the stablecoin market, it seems like, with maybe taking some market share, people going to deposit token versus stablecoins.
Well, come on. Right now, the whole stablecoin market's only 200 billion. I expect within 3 years it to be 10x that. So this is just the fact that all money is going to shift from being digital to
Mm.
being tokenized, whether as a stable coin or a deposit token. It's just a better form of a digital dollar. And so this is going to be a growing market. So I think this will be a huge increase in stable coins. I think, you know, it'll just be right alongside that will be deposit tokens. And that's the way that the banking industry will participate. They don't need stablecoin legislation. They already have the authority to hold a deposit. They just need to make sure that deposit operates in the same efficiency as a stablecoin.
So, with that in mind, and the repeal of SAB 121 and the FDIC saying they're going to remove some restrictions, um, do you see this year being a boom for deposit tokens and stablecoins and these banks, kind of what you're doing, going all in?
Well, you know, our bank, the one we bought, I bought Vast Bank. It actually had the first non-objection letter from the OCC to do crypto. Now, we're not actually doing crypto. So when I talk about deposit tokens or even stable coins, we're using blockchain
Mhm.
and we're using distributed ledger technology, but we're not actually using or holding crypto. So even with the SAB 121 being repealed, I don't think banks like mine, I don't think we have any particular advantage in crypto over companies that are pure custodians or incidental custodians because they're already in exchange, they already have those skills. I think the best thing that we can do, this is just our decision, is be a bridge between the dollar world, which we live in,
Mhm.
and the crypto world. So we might have customers that are crypto companies that need to hold dollars at a bank, and they'll have a choice. You know, they could hold dollars in a stablecoin function, or they may want to hold them in a bank function because once again, they won't be held in this system in a pooled account like they used to do, like for a Square wallet or the way Coinbase holds. Every user will have their own actual account. And companies like crypto companies, when they need to deal with dollars on behalf of their customers, they won't need to hold those dollars in a pooled account. They can just access those dollars directly through open banking. So this is a different way of the banking industry serving the crypto industry. They'll give crypto companies a treasury account, but they won't need to hold pooled funds anymore. That's how we got into trouble with FTX and Binance too. The banks had an opaque FPO account. That will end, we believe, and people will move to having their dollars directly at the bank, but in a form that's on chain. And then through APIs, all those crypto companies or other fintech companies, they can still do everything they used to do with a pooled account, but now they'll just be able to do it by interacting directly with the bank's ledger, which happens to be a blockchain ledger. So, I think it's good for all parties concerned. I mean, there'll be more compliance. Crypto companies and fintech companies will be able to do everything they've done before and more. They'll get closer to the rails of ACH and wires, and they'll be able to just jump right into DeFi or whatever else they want to do, TradeFi. So I do see all parties working more closely in this new arrangement.
Now, what you're doing at USBC, is it proprietary? Are you planning to uh, sell this technology or lease it out or go to other banks and pitch this technology?
It's not proprietary, and really any other bank is welcome to join. The technology is not rocket science, really creating very little here. What is necessary is you got to get the licenses. So the hard part to do basically a deposit token is you got to be a bank first, and you got to be a bank that's willing to have some of its assets, its assets sitting on a blockchain. Now, there aren't that many banks out there that are comfortable with that. And the ones that are, to some extent, like a JP Morgan coin, they're doing it in a very siloed way. What I'm
Mm,
suggesting with USBC is the tokens aren't to be issued by one bank, but a consortium of banks. So
mm,
every dollar that's out there, some percentage of it's going to be at this bank or that bank. It's not like this deposit tokens at bank A and this deposit tokens at bank B. They'll all share in the float of the USBC. And that means, you don't get a run on any one bank. That it's a
right.
collection of banks. You can think of it as like there's a collection of banks behind a Visa or whatnot that are collectively issuing tokenized deposits. And they can shift the balances around between them depending on one has a bigger loan book or one has a smaller loan book. But the point is the people on the other side, the people that hold these tokens, just like the people that hold stable coins, they'll have an address and they can just move it around just like you move a stable coin around. The difference here, though, because it's a bank and because of the licenses, it'll be FDIC insured and
Mm,
it'll have consumer protection. What consumer protection means, if your money, you wake up one day and it's gone, you can say, I didn't authorize that. And like with a bank account, you get your money back. When I wake up and my money is gone at Coinbase, they're like, have a nice day, right? Like
yeah.
they're not under the same regulatory regime. And that gives them some freedom, but it also gives pause to some consumers who'd like to know, and some businesses who'd like to know that if your money moves without your authorization, I don't care for whatever technical reason, you get your money back. And so that's the world of banking. It's different than the world um, of money transmission.
Mm. Now we know FDIC insurance setup. It doesn't cover the entire deposit amount. I think it was up to $250,000 per person or whatever it may be. Will this be different or follow the same model?
Well, that's true. It does just cover up to 250,000. There are a bunch of secondary market schemes. I used to work at Promontory. We had the Promontory Interfinancial Network, which had a very clever amount of software that just took deposits that were above 250 and cross deposited them at other institutions. So if you had $5 million, your money would actually be cross deposited at other banks. That network grew to over 3,000 banks. And so there's a way to basically, by basically breaking up into packets, to
Mm,
make deposit insurance extensible so you don't lose it simply because you have a big deposit concentration. Now, Silicon Valley Bank had a problem in that regard, and people just took it as safe until it wasn't, and then they realized a lot of their money wasn't insured. But for almost every other bank, and certainly banks that participate in these networks of redepositing, virtually all the funds can end up FDIC insured. And so that level of confidence is achievable.
mm. And I think you may have answered this, but I want to make sure I understand. So USBC right now in stablecoin format, once again, I can earn rewards on it, 5.25% on like Uphold. Will the token itself be morphed into fully a deposit token or will it be split? Some of it. as a stablecoin
Now we'll
similar.
just move it all over to deposit token because to us, it'll keep doing everything it does as a stable coin, but you'll just get better guarantees. And so that's just a matter of when we move the technology that's already operating offshore and bring it onshore to work with a bank. And so to get it to work with a bank is just going through all the regulatory clearances to make sure they're comfortable that the ledger we're using is bank industrial strength.
Mm. And you mentioned it will be on the Ethereum and Solana blockchains. We've seen stablecoin issuers, try to put their token on different blockchains so that you have more interoperability, more reach. Are you planning to expand to other blockchains?
We're also working with Stellar right now. We're open to other chains. At the end of the day, though, the user shouldn't even know which chain we're on.
Right.
If they dig underneath, they can see. But if they're just moving money from one user to another, we'll make all that, you know, like it shouldn't matter when you're making a request on a browser, whether you use Safari or Chrome.
Right.
And to us, all those chains, they have different pros and cons. We'll eventually just work our way down the list and do them all because we're chain agnostic for USBC.
Mm. And then I know, I think you mentioned it earlier, but I'm assuming the USBC can be accessed globally, right? Wherever you're at.
The big watchwords always they're in all of our strategic docs. They're in the principles and strategy for the bank. And what they're really in is in the executive order that came out from the White House. It uses two words, open banking and fair access. And to us, open banking means as long as you have the credentials and you've delegated responsibility, any third-party application, any app, the developers ought to be able to get access to your funds with your permission to do what you want. And fair access means if it's legal and it's licensed, we're going to be non-discriminatory. And so it's not just race, religion, and gender, it's also national origin. We don't see why somebody who has proper compliance credentials should be disallowed from holding a US dollar simply because they live on one side of the border or another. Now, obviously, stablecoins, they don't have any concern with this, but even for deposit tokens, we view it as a fundamental principle of non-discrimination and fair access that everybody ought to have access. Now, if you're on like the OFAC list, your usage may be sharply curtailed, right? And so we expect everybody in the world to have access to US dollars in a compliant form. And really one of the differentiations from stablecoins is stablecoins just basically service those same people by plausible deniability. It's in it's in a MetaMask wallet, it has no identity, we don't know who holds it. Yeah, Tether issued it, maybe they knew who they issued it to, but two hops away, it's just out there, right? And so for some use cases, that may be okay. But I personally don't think that Walmart's going to want to show up with, 3 billion of payments from wallets with no identity. I mean,
Yeah.
maybe they're okay with that, but I think at some point in time when a bomb goes off or, you know, some big tax evasion or money laundering scheme and you find out that you're part of it because you had no idea whose money you were taking in, yeah,
Yeah.
that like nobody's really talking or thinking about that right now because we're all in, hey, stablecoin, celebration time because we're going to get some rules, but
Right.
those rules aren't going to fix those problems. But those problems didn't go away. They just haven't really come to the surface yet. And so
Yeah.
we're kind of taking the long-term view that eventually there'll be a bunch of people that are okay dealing with the gray market of wallets with dollars in it that don't have identity, but we're going to be focused on the green market of wallets that, or sorry, addresses that all have identity. And so you cannot hold a USBC without an identity.
Mm.
That's just part of the smart contract that's built in. And it can be privacy preserving. That's a different issue, but it can't be anonymous.
Mm. Got it. Yeah, I mean, and it seems like all the regulations are moving towards having fully KYC AML set up for whether it be stablecoin issuers, crypto exchange.
Well, fully KYC'd at the point at which it's issued and redeemed.
Mm.
But there's a world in between, right? And so that is a big glaring, It's a big glaring loophole. It's like, in America, all gun dealers have to, put people through background checks. But if you buy online, you know, peer to peer, you go to a gun show, no checks. And guess
Yeah.
what happens when you have that kind of regulation?
Yeah.
You get what you get, right? And so, look, that's the world stablecoins are in. We like it. I mean, I participate in the Wild West world, but I'm also like put my regulator hat on and my law enforcement hat on. And I know that for some economic activity, to bring that into blockchain and distributed ledger technology, you're going to need some compliance and you're going to need some identity.
So on that note, obviously market structure bill in play this year, stablecoin legislation. How do you think the stablecoin legislation will affect what you're doing? Is it just going to amplify it, be better for you guys? Because to your point, this is where the puck is going as far as regulations.
Well, I think it's going to bring in a whole bunch of integrators of people. Like we've already seen them starting to come in, like with Visa and Stripe. They're already integrating stablecoins into their stack. And USBC works just like a stablecoin. It just has more compliance built into it. And so it's terrific for us. The more uptake there is of stablecoins, once again, that just raises the opportunity for USBC is just one more type of token that you can plug in if you're concerned about compliance, consumer protection, and security in terms of insurance and whatnot. So
Mm.
um, we're definitely psyched to be along for the ride.
For sure. And Vast Bank, outside of what you guys are doing here with the deposit token, are you planning to offer any financial services to crypto companies, banking services, and other things like that?
We'll do all the standing boring stuff. You want to get a checking, we'll do all that as well. But really, it's the inbound from the legacy world. Wire transfers still come in. You know, think of it like the window at the casino. Somebody's got to run that window where you buy your poker chips. But let's be clear, nobody hangs around the window at the casino. They go to the tables, right? And so, we will still provide window services to every type of fintech, crypto company. We're going to do all the boring stuff as well. And we're going to keep it boring because, the fintechs and the crypto companies, they're doing the fun stuff. And we're just trying to basically remove friction at the window so you can get right to the casino.
Mm. So I want to get your perspective on Operation Chokepoint 2.0. We're seeing a lot of information coming out of the Fed, FDIC, many of these folks, conversations of blocking crypto companies from getting banking services. Look, I don't know what happened with SVB, but it seems like there was an agenda to shut down these banks that were helping crypto companies. In hindsight, looking back and what you're doing, what's your perspective on what happened there?
Well, I mean, Operation Choke Point cost me a couple of extra years and many, many millions of dollars to finally get my bank charter.
Mm.
What I had to go through to get through it, I feel very privileged and lucky and fortunate. I thank the team that I worked with, but we had a lot of insiders but even me, who'd been a Federal Reserve regulator before, worked for years at Promontory, had cash, promised to not do a lot of things. I'm lucky that we still even have running water and electricity at the bank because of all the things I had to promise I wouldn't do before they would
Wow.
let me buy a bank. When we tried to first do this at a state charter level and had to go through the FDIC, we had a year to close the deal after we reached the commercial terms. We did the pre-approval process. All it was a simple change of control. In the entire year period, the FDIC never even acknowledged that our application was complete. They just ran out the clock. And
Mm.
so Operation Choke Point is running out the clock on people. Just give us a little bit more time. On the last day of my commercial terms, after a year, I received a letter of 13 pages of single space questions for things like, well, I can't say what was in the letter, but that was a year into the process and the application had never even been acknowledged as filed. And so that type of Kafka-ish behavior, you know, really was the hallmark of, the last administration. Again, I don't talk about this from a political point of view, but If anybody has any question as to whether Operation 2.0 was real, it was real. And remnants of it are still out there. Obviously, there's been a new memo at the top to knock it off, but it takes a while for that to percolate down. And so, there are a lot of people out there still running around checking boxes, doing risk theater, compliance theater. We haven't gotten to the point yet where real risk and real compliance, actually catching bad guys, worrying about real consumer protection as opposed to going through the motions, is what regulators are doing in the trenches. Look, there are some good regulators, but look, a lot of what's still going on out there is just theater. And so it will take time to change. I hope it does change. The tone at the top has changed, and they've told folks to focus on real risk and allow some competition and innovation in the marketplace.
Greg, what do you think about this? It's something I've thought about over the years. And once again, putting all the political stuff aside, the more I look at it, I don't think it was a political thing, Democrat versus Republican type thing. It almost seemed like it was, hey, we control the money. We're the Fed, we're the Treasury. We work with the biggest banks in the world, JP Morgan. And you see the tone coming from Jamie Dimon. This was more of a control thing. We can't see where the currency is going as far as it going to stablecoins, Bitcoin, altcoins, and so forth. We're going to lose control. But now that there's ETF wrappers, now that we are going to put stablecoin legislation through and make it law, now we're easing up. And maybe the political show or backdrop was just theater.
Well, it kind of breaks kind of strange and weird. Like there was even a while back there with Jamie Dimon and Elizabeth Warren were having like a bromance getting down on,
Yes.
but many different bedfellows and different people defected from the ranks of the Democrats at different times. We've seen that with tech, just depending on, who kind of put their interests ahead of their maybe principles and whatnot. But there's not a clear dividing line. Obviously, clearly, Republicans were more willing and open to basically allow innovation in crypto. It didn't used to be that way. It used to be kind of flipped around.
Yes.
People got on the wrong side of receiving donations from Sam Bankman-Fried. The Democrats went like 180 degrees in the other way to be anti-crypto to show that they were no longer like under Sam's spell. So it was a sad 4 years, and I'm glad that's in the rearview mirror. Hoping for better going forward. I'm sort of in the political spectrum myself. I ran for Congress last time, so I've got some inside baseball insights. But I think there are good folks on both sides of the aisle that are actually interested in seeing the U.S. be a leader. There are still some, I would consider them Luddite segments that are still afraid of or just think this whole thing is like smoke and mirrors and are going to keep their foot on the brake. But I hope it doesn't just seesaw like 4 years on, 4 years off. Again, I personally believe this is an area like AI where the U.S. could be a world leader. And, I want there to be good regulation. I want there to be tough regulation. But, I don't want I don't want to be in a Tony Soprano kind of situation anymore where it feels like a shakedown world. And having been, on the wrong side of the shakedown when I was at Ripple to, being an investor in Coinbase to like having my application never being acknowledged as even being filed, I'm ready just to roll up my sleeves and get to work. And I really like this space. And I feel like we're finally at a time where what's going to happen in the marketplace is going to be determined by like who executes as opposed to like who's the best at threading the regulatory needle. And look, I've been pretty good at threading that regulatory needle, but I don't think that should be the highest. That shouldn't be what determines success in this. There's a lot of other people that are really good at building products and operating value add for customers and businesses and stuff. And it's sort of sad that, you have to be like, an insider to even get a seat at the table to play in this game.
Hmm. So, are you anticipating that we see a boom in innovation and building capital coming back to the United States? Companies feeling less afraid, right? No more regulation by enforcement because we're going to have a better SEC, CFTC. I mean, you got a White House crypto czar, you got a Secretary Treasury of the Treasury who's pro crypto. All these people are pro crypto now.
Well, the boom is already on. The boom is definitely on right here. And I was at it for 2018. It was again 2021. I'm sure there'll be another bust. There'll be a big shakeout. Like there's a gazillion people that are working on like stablecoin integration. We're putting a couple of bets in on that. But it's like any gold rush. It's
Hmm.
going to overshoot and come back. Question is, you know, is that going to come back later this year? Is it next year? But we're in it for the long haul, and so we try not to get buffeted by these up and down cycles. But it is party on right now. People are really, really psyched and are integrating stablecoin solutions, tokenized solutions at a breathtaking pace.
Yeah. So on that note, with the boom and bust cycles, do you foresee there's going to be some consolidation with the stablecoin market? Because it seems like everyone is launching a stablecoin, even Ripple, as you mentioned you work
Yeah,
with, PayPal. There's so many people doing it now.
I mean, there's two different arguments. It's kind of like there is an argument why there could be like a gazillion stable coins, which is kind of, I call it the wooden nickel argument. Like you go to every carnival and they each have their own wooden nickel. Of course, you can't use the wooden nickel across the carnivals.
Mhm.
And so there'll be a bunch of that wooden nickel stablecoinism. And that'll keep a lot of people busy. But that's like to me a lot of little CompuServes and AOLs. The big game out there, and really why we call it USBC versus USDC, is a swing for the fences to make the US dollar the ubiquitous form of payment, the Star Trek kind of payment at a global level that works locally. And it's going to be kind of like, was it Glengarry, Glen Ross? There's like, first place is a Cadillac, second place is steak knives, and third place is you're fired, right? So I do believe there'll be some consolidation at that unless some of these tokens get some specialized niche. There probably will be one stable coin that's really good for everything that likes to be done without identity. It's a little bit, because there's a lot of stuff in the world that I don't want to call it like, shady stuff in sunny places. There's a demand for that. But, the question is who's going to be the compliance solution that's integrated, you know, in the commercial realm for consumers and businesses. That mantle is still to be taken. I think USDC has the lead there. We're obviously looking at coming in that with a different vector, and other folks, the PayPals, the Ripples of the world, a lot of other folks that are going to kind of try to be like grab that 1%. But like I'm not in that grab 1% kind of world. I'm in the Cadillac versus Steak Lives fight. That's how I see it.
For sure. Well, you probably can't answer this, but are you guys looking at possible acquisitions of some of these players, even if startups building certain stablecoin infrastructure, or payment solutions and things like that?
Well, absolutely. Either acquisitions or investments or having options. USBC will go public this year as a reverse merger. It's
Hmm.
kind of a boring way to go public. You just buy a public company. We will be funded with Bitcoin, oddly enough. I think kind of crazy thing that you're actually going to fund it with Bitcoin. We're not spending the Bitcoin, that's just the capital base. And the goal will be to basically use that public company stock for acquisitions when necessary or to pay options. That is the vehicle. The reason to be a public company, I think USDC will, through Circle, will go public this year, is people want the transparency. So
Yes.
we want the scrutiny. We want to be audited. We want to show that we're on the up and up. But USBC, remember, it's not the bank. It is the scheme. You can think of it as like a new form of Visa.
Hmm.
And so that's the entity that should be the public entity that receives the scrutiny, whether that invests in or partners with banks, with market makers, with ledger companies, with identity credential providers. All those will be part of the ecosystem. Not clear that they need to be acquired, but they need to be part of the ecosystem. We always talk ecosystem, and having taken a company public before where I bought 62 companies in 9 months, what a
Mm.
pain in the ass. Actually owning stuff, it sucks, man. So it's much better to have just APIs and aligned incentives because otherwise you feel like you got to put a suit on and it takes all the fun and joy out of doing this stuff.
Question on wallet support. Tell us a bit about what you're doing there and plans to get other wallets to support. And eventually, with the repeal of SAB121 and all these things that are happening in the banking industry opening up, could we see in banking apps the ability to move stable coins supporting USBC and other things?
Yeah, the whole goal here, and it's really not difference between USDC or USBC, is it's your coin, right? It's not your coin at this custodian or that custodian. I mean, you can have your money at a custodian, or you can just have it self-custodially, and then it can appear. Just like USDC can appear in a MetaMask wallet, it ought to be able to appear in a Wells Fargo wallet if they want to let you do that. And the same thing in a Square Cash wallet or a Venmo wallet. And so all those wallets are going to have to decide, do they want to be exclusionary and not let you see your stable coins or your deposit tokens because they want to push theirs, or do they want to be inclusive? And you saw this battle play out when Binance for a while kicked USDC off their platform, right?
Mhm.
They wanted people to use their stable coin. And that's kind of a channel conflict. We won't be in that channel conflict. We're like, hey, we're doing the coin, it can pair in any wallet, up to you. You know, we don't care what else is in the wallet, user choice, right? And so in this world, wallets might have some of the money being held by that wallet company custodially, but the question is, will they support other non-custodial sources of assets, including stable coins and deposit tokens? We hope they will. We think that if they don't, they'll be kind of lame, and that everyone will be forced to basically let you see your money wherever you use it, whether it's in a wallet, a marketplace, could be a metaverse, you know, could be a remittance company. It's your money. It should appear and go wherever you go.
Yeah, absolutely. I wanted to get your thoughts on the SEC. Obviously, there's a regime change. The crypto task force has been formed. Hester Peirce is leading that, and we seem to have more friendliness coming out from the SEC. Do you anticipate that cases against Coinbase and Binance and these things will be thrown out? Non-fraud cases, Ripple settlement probably coming in the works. Do you think those things will happen this year?
Yeah, I don't. I've never understood why, if you have a problem with somebody's practice and it isn't like fraud, just go in and say, like, let's have a conversation. The conversations don't have to be like, oh, Mr. Khashoggi, come on in and pick up a wedding license, and then you come out chopped up in pieces. And so that approach to discourse between the regulators and the innovators is, to me, fearful and ridiculous, but it has characterized sort of our country's behavior for some period of time. So I do believe there will be coordination, collaboration between the regulators. And I want the regulators to be tough on fraud, you
Yes.
know, and root that out. But if people are just trying to do things right and there's a market problem or a structuring problem, let's have rules, right? And regulations, and we can have a public policy debate. Like, we can decide for stablecoins whether states should be able to like license those rather than just the federal government. And we can decide at $10 billion, you get both a federal regulator in addition to a state regulator. That's just, intelligent people can disagree on those points,
Hmm.
but those should be resolved through just like negotiations, and Congress should do its job, and it's doing its job right now in this regard, and not like in court through like, reading the fine print and trying to deign like a rock fell on his head, so it might fall on ours. Maybe we shouldn't do that. Like, that's a ridiculous way to actually run a country. And we've seen the results in terms of retarding innovation and leadership that we experienced during the last administration for doing that.
Do you think we're going to get more altcoin ETFs, XRP, Solana? Some of these ETFs filings have been piling up. We got Bitcoin and Ethereum, of course,
Yeah,
hoping that we get staking as well.
I have no idea why there would not be, a Solana ETF or a XRP ETF. I mean, it at some point, you're pretty far down far down the map, but absolutely, right?
Mm. Bitcoin Reserve.
Yes.
A lot of states throwing their hat in the ring. Federal level, we have a bill. Um, do you think that happens this cycle, or maybe I have the theory that they approve it, but it's not necessarily to start buying right away, but just holding on to the 200,000 plus Bitcoin they already have in custody?
I think there's a strong chance that they'll get the foundation in. Like people can argue about the number, but
Mm.
it's hard for people. I mean, people will argue that the government shouldn't own any Bitcoin, but to me, you know, even if you're not a Michael Sayer fan, you got to acknowledge that from a risk point of view, do you really want to be like have none of this asset? It's like it's one thing to say you're betting on Bitcoin. It's another thing to say you're betting against Bitcoin. So betting against Bitcoin is kind of like going short on GameStop. And I would not, if I was the government, sell down my position. I do believe that Bitcoin is probably the best hedge against inflation and rampant government spending. Gold's done pretty well too, but Bitcoin is just it's got its advantages and stuff. So I tell people it's a risk to not have any Bitcoin. I'm not telling people to put, 50 or even 5% of their wealth into Bitcoin, but to have none at all, I don't know, in a Mad Max world, you probably need canned food and bullets and stuff like that. So probably have a little Bitcoin on the shelf.
Yeah, absolutely. Definitely agree with you there. And there's talks of possibly, it's rumors, but crypto stockpile, not just Bitcoin, but a bunch of their digital.
Yeah, same thing. I mean, like you don't want to just have peas. You might want to have some corn and Brussels sprouts as well. So I wouldn't, I'm not a Bitcoin maximalist, but I do have some Bitcoin down there in my cellar, right? So,
Sure.
uh, but I have the others as well. So
For
that's
sure.
me. And I'm not giving investment advice here, but I like gold coins too.
For sure. So Greg, I gotta ask you about this. I wish I didn't have to, but meme coins, it's madness right now. I have a love-hate relationship. I believe in the free market, but I believe there needs to be some sort of guardrail because people are getting rugged. What are your thoughts on how this meme coin craziness?
Well, I mean, to me, it's just silly stuff, and like it's a greater fools type theory stuff. And if you want to spend some of your life on that, to me, that's like just you know betting on the ponies and stuff like that. And so I you can have some regulation, but at the end of the day, a fool and his money are quickly parted. But the point is with meme coins is, did you have fun doing it, right? Like, it's like what I said when you know, when I did business in Russia, I was like lost all my clothes and lost all my money, but had a lot of fun doing it, right? So you just got to know what you're getting into when you're getting into it. So,
Yeah, I would prefer to go to Vegas to get some free drinks. There may be some nice girls walking around, so
right.
versus meme
But
coins, but it's the same thing, right?
it is, but people like that stuff, and like I watch people just do all their money in the slots, but look, I play poker, so we all have our vices, and we know like just in moderation, right? So
For
I
sure.
hope people don't lose their life savings on meme coins, and to me, it's really not that different than just people buying lottery tickets and doing other just wasting time and money in their life, and that's the great thing about being alive.
Yeah, for sure. Greg, great stuff. I'm excited for the future updates around USBC and when it goes fully deposit token status, we'll have to have you back on and talk a bit about some of that stuff. But thank you so much for joining me.
Sure. In the meantime, you can just hold it as a stable coin and just earn some yield on it. I mean, it's not the most exciting thing around, but it is, it's better yield than most stable coins. So just keep that in mind.
For sure.